We start the update with a mid-year Private Sector Day 2026 and the focus of the upcoming mid-year Private Sector Day, which is scheduled for the 11th and 12th June 2026 at the Kenneth Kaunda International Conference Center in Lusaka. The event, which will be graced by the President, Mr. Hakainde Hichilema, brings together government and private sector through the Public-Private Dialogue Forum PPDF to review progress made towards economic recovery, transformation and resilience. Over the past 4 years, the PPDF has provided a platform for businesses and government to engage on reforms, address challenges affecting investment and productivity, and jointly identify opportunities for growth in sectors such as mining, agriculture, energy, tourism, manufacturing and financial services. Today we're joined by Mutisunge Zulu, who is from Zanaco, the Chief Risk Officer, just to talk to us about the relevance of this particular occasion on our calendar. I'd like to welcome you.
Thank you very much, and thanks for hosting me.
I know that we've been seeing growth in this Private Sector Day, but just give us a bit of a background to it and how it has brought together synergies and as far as government and private sector is concerned.
Thank you very much, Chile. It's always good to look at a historical background. I think previously we had the private sector and we had the public sector as well, but then there was a symmetry. The private sector were very clear about their mandate and to drive growth, but they didn't have a conducive environment. The public sector on one end were setting policy that may not have been consistent with what the private sector were expecting. So because of this asymmetry, the economy suffered. The private sector was ready to do a lot of initiatives to stimulate growth in the economy, yet that wasn't happening. So there was bottlenecks. So the initiative around the PPDF, which is the Public-Private Dialogue Forum, brought together a platform through which your private sector and the public sector investors could come together to understand what the challenges were and then, brainstorm solutions. I think the most important thing about the PPDF is that it has support of the president. And when it has support of the president, then you know that the tone at the top is right. In terms of policy formulation, in terms of creating a conducive environment, in terms of what the private sector felt was choking them and not allowing them to thrive. So what we have now is your ministers, your PEMSECs, the public sector in one room with the private sector. So private sector, tell us what you want, and then at the same time, the public sector should also say what they are expecting. And like that, you have teamwork, and then you have both sectors then driving the wheels of growth. I think the most important realization in the last 4 years is that it's the private sector that drives growth, not the public sector. The public sector creates a conducive environment for businesses to thrive. And we are seeing a shifting change in the role of the private sector, not only driving growth, but being the catalyst of investment, to push even more than just growth. But we're talking about sustainability over the years to come. So that's the role that the PPDF Forum and this mid-year gathering would be like a pit stop, a reflection point. The year is halfway. There are reflections. Things have happened between Jan to June. So it's time for them to reflect what has worked, what hasn't worked, and what should the focus be to the end of the year. But also to celebrate wins and to also discuss where there are opportunities for them to thrive even better. But ultimately, I think it's also a platform for investors to know about what's happening to Zambia. There's confidence boost. We sell ourselves short. We don't talk about a lot of things that we do in this country, and that's the only way a lot of stakeholders and people that are interested in Zambia will get to know about what's happening.
I know networking is the currency right now, and we have been speaking about economic recovery. When you look at the whole spectrum, you've talked about the private sector. We've got emerging businesses that come to this platform. We've got indigenous businesses. When we're looking at investment now, we look at domestic and both international as well. Let's talk about what this mid-year platform provides in a platform to see that economic recovery is also the story that is told, and we see the gains.
I think it's really you've put it out rightly. For me, it's about execution. It's not just about networking. You can network, it ends there. What next? And I think if you look at the theme for this year, driving jobs, shared prosperity, when you talk about economic growth, when you talk about how well an economy is performing, when you talk about unlocking opportunity, the average person out there wants it to translate to prosperity, more money in people's pockets, employment, jobs creation. When when job numbers go up, then you expect that these are benefits that trickle to households, and then people can go to school and the like. And I think that we also need to understand this in the perspective of where Zambia has come from. The last 5 years, Zambia was hamstrung with debt. There was the debt restructure discussion. There were IMF programs that were, going on. And I think there's been this fiscal trajectory, because on the public sector side, this story is actually going to be told. It's not a secret that debt restructure is at 94%. Zambia is shifting from crisis management through debt restructure to balance sheet management actively. And I think you also already know about the debt buyback discussion. And I think as at yesterday, we were getting reports from the media that Zambia has managed to secure about 75%. I'm not going to go into that discussion, but the important thing is you can see that the public sector is managing its balance sheet to create fiscal space. That fiscal space should allow the government to have income and revenues in their pockets to drive energy sustainability, infrastructure, and construction. But this is just the public sector on one end. Who really drives that growth? It's the private sector. So this is also time for the government to hold the private sector accountable to a number of things. If it's financial institutions, what are you doing about interest rates? If it's mining, how far are you expanding? Are you implementing your local content, this regulation that was rolled out? To what extent have you given opportunities to the locals, to drive that growth? If it's manufacturing, are we now talking about value addition? If it's agriculture, that story you're hearing about Zambia hitting 4.9 million metric tons of corn, there's been agricultural reforms on one end. And if we delve deeper into the agri story, you know that it's about 93% of small-scale farmers that are contributing to that. But then there's been all these agricultural reforms. If it's energy, what have we learned from the worst drought in 40 years, when we had load shedding and we didn't have power for 21 hours? We can talk about that success story. But Zambia is talking about mining and hitting 3 million metric tons by 2031. But the question is, you can't discuss mining in the absence of energy. So you have energy players on one end to understand what are the bottlenecks, what will it take for you to hit the 10 gigawatts that was set by the public. There are those numbers that the president has set out, 10 gigawatts of energy. Is it 10 million metric tons of maize? Is it 5 million metric tons of wheat? We're talking about beef exports and the like. So we have targets on one end, but the people that are going to drive and make sure that those targets are hit are the private sector. Do you have enough capital to be able to drive all these and meet these targets? And at the end of it, at the center of it all, is the average citizens, because the Zambians are now listening into macro numbers and everything, but look, it should translate into prosperity, because the quality of living must improve at some point. So that is sort of the platform where you will have panel discussions. It's a time to ask people the difficult questions, It's a time for the public sector to also get feedback on what the private sector thinks should further be done, in terms of what policies do we need, because it's an ongoing. And then if you look at the auspices of everything here, you've got an IMF program that then supported reforms. There's still reforms in the energy sector. Yes, the reforms were announced, but then the question is, have they fully rolled out? Net metering, open access, what investments in infrastructure should support energy, your power lines, your East Africa power pool interconnectors. All those things need to actualize. It is at this platform that all those questions need to be asked, because if we don't ask the right questions, then I think the economy will suffer. So that's the platform through which all these questions will be asked, Chine.
I know that you've talked about an active balance sheet, and that's a
Yes.
story that we continue to see in economic recovery. What does this do to investor confidence?
So on one end, before I get to what it means for investor confidence, already Zambia's credit rating was upgraded. Already that is sending confidence, positive signals. When your credit rating gets upgraded, then you are able to use that and leverage and get cheaper funding. And that's exactly what Zambia did. Went to the AFDB, negotiated some sort of financing, definitely coming at a lower cost, leveraging off an improved credit rating, but through a debt swap arrangement that then allows Zambia to manage its liabilities. We have a bond after the restructure, which is a 2053 bond. It's a bond B. It's the most sensitive sovereign indicator that Zambia has. And the way it was structured was such that when Zambia's cash flows were low and weak, the coupon was about 0.5%. But then the agreement was that as the economy opens up, as copper prices go up, which are a proxy for a stronger cash flow, if Zambia meets certain benchmarks with the IMF in terms of performance, then the coupon would then go upwards. But then the challenge that's here is that a higher coupon is good for investors, but on the other end, on the other side of the coin, is a cost for Zambia. So what you're seeing now as an initiative, a debt buyback initiative, is now your authorities trying to be proactive about managing this piece, managing the cost before it kicks in. But then what we're now seeing positively is that it's a win-win. You know, your investors are going to be given, if this goes through, your investors would be given an amount of money today compared to, you know, kicking the can and waiting for the bond to mature, which would be costly for Zambia. But then Zambia using funds from a cheaper source to offset and pay off those investors they owe, and then focus and create fiscal space to be able to invest in energy resilience. I think I talked about power already. You can't mine with solar. You need base load. So we need to get to 10 gigawatts to support the 3 million metric tons. We're looking at infrastructure as well, which is critical. You can't talk about growth without infrastructure, and other projects that you are seeing. So in terms of confidence, it's already a positive indicator that Zambia's macros are starting to strengthen. And that's the reason why you're seeing your bondholders as well thinking about that coupon, because the clear idea around that was that if the macros start moving in a particular direction, then clearly Zambia's recovery prospects are stronger, and Zambia is in a stronger position than where it was 5 years ago. It does still boost confidence. We are seeing Zambia. It means Zambia is also playing in the international capital markets, a space that it had stepped away from when it was default rated. So things are looking up for Zambia. But like I say, Chile, it's always important to, you know, not deviate from how it should benefit the average, you know, citizen, because everyone is listening to this type of news. So shared prosperity, going back to the theme of the PPDF mid-year private sector day.
Let's conclude, Mutisunge, in looking at two aspects. You coming from the financial sector.
Yes.
The economic transformation, like you rightfully put it, cannot be achieved without financial sectors like yourselves. But
Yes.
also, there is a big question of livelihoods of the Zambian people, ordinary
Yes.
Zambians, and when they will see or continue to enjoy
Yes.
this kind of transformation.
So coming from the financial sector, so we're part of the private sector. We're sort of an enabler. We're the go-between. We're the financiers. And in financing, we partner in the growth agenda. We partner in this investment agenda. We are there. No, being a systemically important bank, I mean, we're the largest bank in Zambia by asset size and market capitalization if you look at financial institutions. So we get to feel the weight of this, because the expectation is that what are you doing in terms of financing? In terms of financing the SME, we look at those sectors. If I take you a little trip down memory lane, things were very, very difficult, I think, in the, you know, with this hamstrung debt and then within the drought crisis. And I think we did stand out as Sanako. I mean, we were partners partners in growth when it comes to, say, the energy sector as well. We were there. Within the mining space as well, we were there. I mean, it's not a secret that there are some figures that have been in this studio and they've said, don't forget Zanaco. I think Zanaco went out of its way to do this. So I think we've continued to play our part. So for us, it's not just financing. We're a partner in the growth agenda. So we take risk on individuals, on companies that are driving this same growth, because that forms the basis of our clientele base. And thinking about livelihoods as well, we do play a very significant role. If I look at some of the products that we have, for example, if you look at this agency banking model, the booths that you will see people, you know, have, like, we've got the largest agency network. For us, it's not just a business. Those people are taking people to school and families. So the ripple effects and the multiplier effects in terms of livelihoods are very genuine and real. But like I said, this country has a lot of banks. So there will be the banking sector represented at the PPDF. And I think one of the questions that everyone will be asking about is that we've seen macro stability, inflation is coming down, the economy is opening up, risk appetite is back in this economy. So the question is the cost of capital. Those questions will definitely come in, and I think that the banks will be in a position to respond to that. But ultimately, I think we are sort of the oil that, we are the oil that drives the engine of growth. You have the public sector this side, you have the private sector. They need capital. We have a part to play in providing a form of capital as well. So the financing aspect becomes very critical. So long and short, the entire value chain. When jobs thrive, when the private sector thrives, they start to grow, they hire more people, and that trickles down to the average individual. And eventually, we expect that the cost of living should come down, and Zambians should be able to afford, goods and services. I mean, if they walk into a supermarket, like I always give that example, they expect to get more out of a 500 kwacha than what they got 5 years ago. It's a process, but it's a conversation that ultimately is real. At the cost of capital, livelihoods, and where this economy is going, and the like, are very, very critical areas that will definitely be focused on at the private sector day as well.
Thank you so much, Mutisunge, for coming.
Thank you for hosting me. Always a pleasure.
Thank you. Mutisunge Zulu, Chief Risk Officer, Zanaco, talking to us about the Private Sector Day mid-year that will be coming up, and saying that the economic recovery journey is positive.